Welcome to Coin Engineer, friends. This video is the third in our 2024 Futures playlist, which is our most up-to-date futures training series. Previously, we introduced the futures panel to you and talked about some details regarding short trading. In this video, I actually want to talk a bit about long trading. Of course, long trading is not as complex as short trading, but I will still talk about some strategies, tactics, and details you need to know. If you haven't opened a futures account yet, you can use the link in the description. So if you've hit the like button and left nice comments below, let's get right into our video. We enter leverage trading, also known as futures trading, from this futures section. As we mentioned before, this is the section where we open trades in USD. CoinM can be referred to as the place where we trade or open short and long positions on any cryptocurrency. Usually the USD section is used. What we call a long position is actually a method, a type of trade where we make money as the price goes up. So in that sense, it resembles spot trading. Well, let's say, in spot trading, we bought here and sold there. We're making a profit, right? Let's say we made an 18% profit. We bought low and sold high. So then why should we use futures trading? Why should we open a long position? The first reason is the leverage option, friends. As you know, let's say you opened a trade with $100 and 10 times leverage. It carries a volume as if it were $1,000. This actually allows us to make transactions more quickly, but if you can't manage your leverage and margin levels well, we've encountered many people who have lost their money here. Let's say I'm a long-term investor, friends. In that case, spot trading is a good choice. Let's say you bought from here and sold from there. That's great, isn't it? But let's say you want to analyze the chart more closely and perhaps make some trades in 15 minutes or maybe an hour. Let's say you identified this area as support. You think the price will react upwards when it reaches here. The price movement here isn't very much, 1%, right? Not even 1%. But you think there's an opportunity here. I'm speaking to friends who know technical analysis. If you want to open trades based on technical analysis and you're looking at these trades on smaller charts, you have to do it using a bit of leverage. Otherwise, when we enter with a large amount, we only capture a 1% profit. But you should never trade with large amounts. That's why we keep our budget low and increase our leverage a bit, to 5 times, 6 times, raising the profit here from 0.9 to 5%. I mean, I'm talking about 5 or 6 times leverage. This allows us to take advantage of this opportunity. But the thing to be careful about here, as I said, is that you should never do this transaction with all your money. Your spot wallet should cover 85, 90, or even 95% of all your money in crypto. For futures, try to keep it to just 5%, 10%, or even avoid going above 10%. Allocate a budget. Transferring money to futures beyond this is really very, very risky, friends. It can disrupt your crisis management. So, to take advantage of opportunities on the chart, even micro opportunities, you can open trades with very small portions of your budget and use leverage without exceeding 10 times leverage. Of course, it is much riskier, more exhausting and stressful compared to spot trading. Besides, if you are actually looking for a good reason to open a long position, it might be because you already have a short position. In general, people who use long positions are already using them to take advantage of periodic opportunities, friends. So there might be news or a short-term trend. Or there might be tweets with news value again. There could be some famous deals. There could be some famous collaborations. These can pump the price. At this point, some traders, some people speculating in the market use these long positions. If you're not following the market very closely, long positions can indeed be risky. If you already have assets in spot and this is not your profession, I think it would be more reasonable to stick with spot. Of course, there might be some opportunities or you might come across news flows, but these generally require close monitoring. By the way, if you want to learn the news accurately and quickly, you can check out Coin Mühendisi Haber's Twitter and Telegram pages. Now, I already have a long position open. Let me also introduce you to this panel that will appear below when you open a trade. I've opened my trade, friends. I will also talk about how to open a trade. But when we open our trade, all the details are written here. As you can see, I opened a long position on Ripple with 10 times leverage. But the reason I'm using this leverage is because I've invested very small amounts here. I can easily add margin to my trade. I can add funds here from either my futures account or my spot account. In other words, I'm opening trades with amounts that will never reach my liquidation or crash level. I recommend this to you as well. Here we have a similar situation. I specifically withdrew all my margin so I can demonstrate adding margin again, because adding margin in long trades usually saves the day. As you can see here, it shows in real time what percentage my trade is in profit and how much I've earned. I have my margin level. I have my liquidation or crash level. What does this mean? If it drops to the 52 levels, my money would be gone, friends. In other words, I would be liquidated. If it drops by 10%, since I'm using 10 times leverage, I would reach my liquidation level. But if I add margin, what was margin again? Let's say I opened a trade worth $365, but I'm adding a bit more money on top. This is actually not opening a new trade or adding to the trade, friends. It's just money that distances you from the liquidation level. But even if you add margin here, if you reach your liquidation level, you will still be liquidated, of course. The aim here is to distance yourself from the liquidation level. Now let's see. 52 cents is my liquidation level. Let's say I added a maximum of $1,000. So assuming it dropped, to 36 cents. But, blindly adding margin is sometimes not healthy either. Especially with cryptocurrencies that have a small market cap, if you really can't predict where the price will go, it's somewhat more predictable with Ripple, Ethereum, and Bitcoin, because they have a very large market cap, but you shouldn't add margin uncontrollably. Sometimes accepting the loss and acknowledging that the market will fall further can be the best option, friends. So how do we open our trade? We will use the panel on the right, friends. Here, we select the type of our trade. From here, we choose the leverage, and from here, we select the amount of leverage. For example, the type of our trade should be isolated or cross friends. What do these mean? This is an isolated trade. As you can see, it is written here. It is written under the margin. In isolated, we add the margin ourselves, like I did a moment ago. Or we withdraw the margin ourselves. Again, like I did a moment ago. I withdrew it from remove. If we open a cross trade, meaning a cross trade, there is no such panel here. So there is no section to click and add margin from here. What happens? Let's say the price starts to drop and I have $1,000 in my futures wallet. It starts using that. It automatically adds it as margin. Personally, I prefer isolated trading. This way, I can add or remove as needed. We recommend this to you as well. Besides, you can also adjust the leverage from here, friends. As we said, it's best not to exceed 10 leverage. Futures trading can indeed become very, very risky at times. This needs to be accepted. Let's say 5 leverage. Now, as you can see, there are limit and market orders, friends. There are also other types of orders here. You can access more details about these by watching the video we left in the descriptions. In its simplest form, your transaction is executed immediately in the market. You say buy right away, meaning you go long, or you say short, and your transaction opens immediately with the best option in the market. But the commission is a bit higher for this. With a limit order, you say, for example, it's currently at 58 levels, and when Bitcoin reaches 57,000 or 57,500, you can say open a long position for me, open a short position for me. So you are already placing an order. Stop limit and stop market orders are slightly different versions of this. Otherwise, the logic is the same. Also, as we mentioned in every futures trading video, there's a very nice feature on Binance here, the TPSL section. When we click here, it actually means take profit and stop loss. These are the take profit or stop loss sections. Let's say I want to enter a long position at 57,000 but I want to sell and exit before it reaches 60,000. I set the price like this. As for the stop loss, if it falls below 57,000, for example, if it reaches 56,500, I want to accept my loss and exit. Let's place our order then. You can adjust your dollar amount, like this. As you can see, there is a transaction here worth $200. Since our leverage is 5, the size and power of our transaction are also written here as potential. This is the money that will come out of our pocket. The amount of USDT that will be deducted from your wallet. I say long, and as you can see, it has been added to the order book. If Bitcoin drops to $57,000, it will automatically open a long position. Additionally, it automatically executed my TP and stop loss orders. It will close the position I opened at 57,000 at 59,955. meaning it will sell for profit. But if it goes down to 56,500 without going up there, then it will sell at a loss. It's like we will have lost an arm. This is how we place our order, friends. When our transaction is executed, it automatically appears in the position section. As you can see in this example, you can view your transaction here. Let's say I want to sell Ripple at 60 cents. Then we click here. I say 0.60, and it even shows the profit I will make. Then I say confirm. Here it is again added to the orders section. For example, if the price suddenly spikes up and makes a wick, it will execute my transaction there. Or by saying close all positions, you can immediately close your trades with the best alternatives offered by Binance. From the prices you see on this order book. In this video, friends, I tried to explain Binance long trades a bit to you. If you are new to the market, be sure to check out our other videos. We are trying to explain the most functional points of this panel to you. In that case, see you in the other videos. It will appear in front of you shortly.